Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about retail banking and wealth management JAIIB paper number 4 case studies. These case studies are a previous year examination questions. We are starting JAIIB classes for forthcoming October 2023 exams in the first week of June 2023. Presently, we are conducting revision classes for JAIIB June 2023 examinations. Interested participants are requested to contact on this number. Case studies number 1, retail banking and wealth management. What are the recent developments in the portfolio management services area in India? Recent developments in the portfolio management. A. No upfront fees will be charged. At the time of joining, no upfront fees will be charged. B. A maximum exit load. At the time of existing, 3% can be charged if they are existing in the first year, and 2% if they are existing in the second year, and 1% if they are existing in the third year. This is the exit load. No exit load applicable after completion of 3 years. This is the exit load. C. CA has to certify the minimum specified prescribed net worth as per SEBI for portfolio managers of 5 crores. So, portfolio managers minimum net worth requirement 5 crores. It has to be taken a certificate from CA. D. A monthly report is mandatory by the portfolio managers with performance reported net of all expenditure and after tax. And performance return has to include whatever the return they are submitting. It includes holdings of securities plus cash holdings plus investment in liquid funds plus securities they have to mention. I mean cash holdings, liquid funds plus portfolio details. E. It is mandatory for operators of portfolio management scheme to disclose the details of distributors' commission to the investors. What is the commission they are charging? They have to disclose every quarter to the investors. So these A to E are the recent development in the portfolio management. This is one. This is case number 2. Customer protection, limiting liability of customers in unauthorized electronic banking transaction. Unauthorized banking transaction, what is the liability of the customer, account holder? This is the case study, 5 marks. This is the RBI circular, this. Summary of customer's liability. Time taken to report the fraudulent transaction from the date of receiving the communication, reporting to bank. What is the customer's liability in this? If they are reporting within 3 working days from the fraudulent transaction date, within 3 days, customer liability is 0. Customer liability is 0 within 3 days. Within 4 to 7 days, the customer is reporting to the bank. Maximum liability of a customer in basic small bank deposit account 5,000, BCBD account 5,000, all other SB accounts 10,000, prepaid payment instruments and gift cards 10,000, current cash credit overdraft accounts of MSME 10,000, current accounts cash credit overdraft accounts of individual with the annual average balance during 365 days preceding the incidence of fraud. These limits up to 25 lakhs 10,000. Credit card with limit up to 5 lakhs also 10,000. So from 1, 2, 3, 4 points, limit is 10,000. within 4 to 7 working days. Then all other current to cash creative overdraft accounts, remaining all other accounts, credit card with limit above 5 lakhs, reporting within 4 to 7 days. Customer liability is 25,000. Customer liability is 25,000. Customer is reporting to the bank beyond 7 days, as per bank board approved policy, the customer liability. Normally, it will be taken as per board approved policy. Customer liability, after 7 days he is reporting, the liability of the customer, the board, respect to bank board, has to take a call. This is about the customer protection, limiting liability of customers in unauthorized electronic banking transactions. This is the third case study, housing loan provision calculation. This is the February 2022 examination question, and 5 marks. This we had added some other points also in this. Housing loan sanctioned and disbursed by bank, turned NPA, presently balance outstanding in loan account 10 lakhs, with realizable value of the house security is 14 lakhs. Balance outstanding 10 lakhs, realizable value of house security is 14 lakhs. So questions 1 to 10 you have to answer. If the account is in standard category, with 10 lakhs balance, what is the provision in standard accounts? The housing loans provision on standard advances is 0.25%. Outstanding is 10 lakhs into 0.25, so 2,500 rupees. This amount, where all the provision on standard category or banks are showing balance sheet, schedule number 5, provisions and other liabilities. Balance sheet, liabilities, schedule number 5, provisions and other liabilities. Number 2, substandard account. If the account in the substandard category, what is the provision? This is a secured advance. Outstanding is 10 lakhs, security is 14 lakhs. Secured substandard, provision is 15%. 10 lakhs into 15, 1,50,000 in substandard account. If the account is in doubtful category, provision. Doubtful one means secured portion 25%. 10 lakhs into 25, 2,50,000. Doubtful one, second year of NPA. If the account shift to doubtful 2 category, provision is secured portion into 40%. So entire amount is secured to 10 lakhs into 44 lakhs. If the account shift to doubtful category 3, 100%, 10 lakhs into 100, 10 lakhs is the provision, NPA provision. LTV ratio, loan to value ratio calculation in this example. Loan 10 lakhs divided by 14 lakhs into 100. LTV ratio in this example is 71.43. 71.43. Loan to security. LTV ratio less than 80%. Risk weightage as per RBI circular 35%. So in this case, the value of LTV ratio is less than 80. Risk weightage 35. LTV ratio above 80 up to 90. Risk weight in the housing loans 50%. What is the risk weighted assets in this example? 10 lakhs into 35%. 10 lakhs into 35, 3,50,000. Risk weighted assets in this example. What is meant by net NPA? Gross NPA minus NPA provisions. Total NPA minus NPA provision, we can get net NPA. This is about the case study, housing loan provision calculation. Third case study. Fourth case study, this repeatedly they are asking in retail banking. Repeatedly. So 10, 11 points I had mentioned. Out of 11, they can ask 5 to 6 points as a 1 to 2 marks or 5 marks case study. BR Act 1949, 1. Section 19(2), bank shall not hold shares more than 30% of paid-up capital of the company, any company, or 30% of paid-up capital and reserves of the bank, whichever is less. This is 1. 2. BR Act Section 20 subsection 1, no loan against banks own shares. No loan against bank own shares. 2. 3. No loans for companies for buyback of their own shares. No loan for companies for buyback of their own shares. 4th, no loan to partnership firms. No loan to partnership firms, sole proprietor currencies against the primary security of shares debentures. 5th, loan against shares which is in demat form, electronic form, maximum 20 lakhs loan, margin is 25%. If the shares are in demat, 20 lakhs margin. If they are in physical form, maximum loan is 10 lakhs with margin of 50%. Physical shares maximum 10, margin 50. Banks overall capital market exposure. Banks aggregate investment in shares, bonds should not exceed the limit of 40% of banks' net owned funds or net worth at the end of the March 31st. Capital market exposure not exceeding 40%. This is total. Directly 20%. Total 40, directly 20% of net worth or net owned funds as on 31st March. 8th, loan against shares for investment of a company in initial public offer. Bank can give loan up to 10 lakhs or 90% of the purchase price of the shares, subject to margin is 50%. Bank has to maintain margin 50. Initial public offer. Employee stock option plan. Banks are allowed to give loan maximum 20 lakhs or 90% of the purchase price or maximum 20 lakhs. This is employee stock option plan. 9th. 10th. Margin for issue of bank guarantee to stock brokers, commodity brokers, exchange brokers. At the time of issuing of bank guarantee to stock, commodity, exchange brokers, what is the margin requirement? 50% of the amount. And out of 50%, cash margin is 25. Out of 50, bank has to insist take 25% cash margin. 11th, risk-weighted assets for capital market exposure. Bank's capital market exposure for CRAR purpose. What is the risk weight? 125%. 125%. These 4 case studies may be helpful for the retail banking and wealth management exam forthcoming Sunday. Thank you very much for extending support to our YouTube channel. We wish all the best to the participants. Thank you very much.